Hello, I'm Donald McIntyre, Newfination.com. This is Newfination Live, and joining us is David Schwartz, Chief Cryptographer of the Ripple Labs. Hello, David. How are you?
Hey Donald, I'm doing well. How are you?
Very well, thank you. David, I wanted to ask you, as a cryptographer and also the cryptographer at Ripple Labs, about what happened in the Bitcoin network, malleability, which was a serious problem in the last 10 days. But before that, can you tell me about your background?
Sure. Recently, I was hired about 3 years ago by Jed McCaleb to see if there was another solution to the double spend problem using a distributed agreement protocol rather than proof of work.
Hmm.
Before that, I was involved in secure cloud storage and secured messaging for government and military customers mostly.
Did you work on the Bitcoin protocol also?
I did a little bit. In fact, that's how Jed found me. I was just kind of finishing up the work that I was doing, and I was looking for something to do next, and I stumbled on Bitcoin, and people were having some problems with mining pools.
Uh-huh.
The mining explosion was just starting to happen, and the software really was never designed to be efficient when you had all these different miners hitting it from all different directions. So people started offering these large rewards in Bitcoins for someone who would solve that problem. I'm like, what are these Bitcoins, and are they worth money? And I realized that it was actually something quite revolutionary that I had stumbled on completely accidentally. And so I made some changes to Bitcoin to make mining more efficient, and then Jed found me through that.
And you earned the bounty?
Yes, I did actually. I think I earned something like 40 Bitcoins. I wish I'd held them a little longer than I did.
David, well, you just said something very important, that you were like recruited to find another solution for the double spending problem, and I knew from before that double spending was the thing that the Bitcoin solved finally. But you
Exactly.
say that it's through. I'm not technical, so you say it's through proof of work, and Ripple is different, is through consensus.
Exactly.
But also, in the last few days, I learned something that I would say another problem that the protocol has, the Bitcoin protocol has, and that is malleability. How is malleability different to double spending?
So double spending is a fundamental problem that any financial system is going to have if it doesn't have a central authority. When I write
Hmm.
you a check, I can't spend the same $500 both to pay you and let's say to pay my landlord. The bank won't clear the check. So you have a central authority that says yes, this person has the money, or no, they don't. If you're trying to design a system like Bitcoin or Ripple that doesn't have a central authority, there has to be some way to prevent a person from sending the same funds to two different places. Otherwise, the
Hmm.
system doesn't work.
Yeah.
And without a central authority, there was no good solution known to that problem until Bitcoin came along. Bitcoin solved that problem with proof of work. Ripple solves it with consensus. Transaction malleability is a different issue. It goes basically like this. Both Bitcoin, Ripple, and all the altcoins secure transactions because if it's your money, you have to sign a transaction in order
Hmm.
to spend that money. And those signatures are designed using a mathematical algorithm that requires a secret that only you know. So I can't
Hmm.
spend your money because I can't make that signature. Only you can. Problem with transaction malleability is that you can't sign the signature. You don't have the signature until you've signed it. Once you have the
Hmm.
signature, you're already done signing. So the transaction has the portion that's signed that says how much you're spending and who it's going to, and that's all completely secure. But then there's this signature, and that
Yeah.
signature itself is not signed. So if
Okay.
someone can change that signature in such a way that it still is a valid signature, but is not literally identical to the original signature,
Mm.
now those two transactions, one with the signature you made and one with the mutated signature, a mutant signature, are both
Hmm.
valid. Only one of them can process. Both Bitcoin and Ripple have a security mechanism to ensure that you can't process both transactions. The problem is, if you see the mutant confirm, you might think that your original transaction never confirmed. So it fools the person who forms the transaction or the recipient. If you tell me you have 10 Bitcoins coming, here's the transaction ID. I will
Hmm.
show that transaction ID never going through because a mutant with a different transaction ID has gone through. And that's what causes the problem. So it doesn't cause a double spend problem. It doesn't allow people to steal your money. But what it does allow is automated systems that issue high volume transactions can become confused if they're not very carefully designed.
That's what I understood the last few days. So it's not that the blockchain, the register or the ledger in the blockchain is modified. It's like it creates confusion on the client side, on the operators.
Right. And unfortunately, because of one design thing in Bitcoin, it's especially vulnerable, and that is this. If I send you 10 Bitcoins and you want to spend 2 of them, you have to refer to the transaction in which I sent you those Bitcoins. It's not like it's not like an account is real in Bitcoin. It's the actual output. So if I send you 10 Bitcoins, that's an output that you can claim to send Bitcoins to someone else. The problem is when you refer to those Bitcoins I sent you, you have to refer to them by transaction ID.
Mm-hmm.
So if the transaction ID is not what you expect, your transaction becomes invalid. So if you have a long chain of transactions that spend each other's outputs and someone changes the transaction ID on one of them, the chain jams, and all the ones after it are invalid, and someone manually has to unjam that chain.
But where does the jam happen? For
It
example,
happens
in the case of empty gox, no? Empty gox, they're matching people who are buying and selling all the time.
Right.
And then they have people sending to their accounts and withdrawing out of empty gox. Where does the jam happen?
So you would think that you could safely spend the outputs of your own transactions because you know your own transactions are good as long as you follow some basic rules. So you might submit transaction 1, and then later, like 5 seconds later, transaction 2 that spends the output of transaction 1. But you have to spend the output of transaction 1 by transaction ID. So if somebody changes the signature and changes the transaction ID, then transaction 2 won't go through. And then if you form transaction 3 and 4 and 5 based on those earlier transactions, that whole chain will jam. And that's what started to happen to people.
But it didn't jam on the blockchain itself.
No, it jammed in the pending transaction pool. So if you're a miner, you get to decide what transactions to include. So you have a group of transactions waiting to go in. And so what happens is those transactions get stuck in that pool, but they'll never go in because they'll never become valid.
Yeah. So when I originate a transaction from my phone or my computer to send you, say, 1 Bitcoin, I send a transmission to the whole network saying I'm sending to David 1 Bitcoin.
Exactly.
That enters the network takes it, but it's awaiting confirmation.
Exactly.
And in that stage is where the jam happens.
Right, exactly. So when you form that transaction, you assume that the network is going to look like you expect it to look. And if somebody mutates one of your earlier transactions, then the network doesn't look like you expected it to look, and your transaction is now referring to the wrong transaction ID. So your transaction is jammed.
Who could generate a problem with this? If you and I were both honest, it doesn't happen. There's no second transaction.
Well, the problem is a miner can do it. Any miner who wants to can do it, and even non-miners can do it. So the easiest case is, imagine if you're a miner and you have, let's say, 50 unconfirmed transactions that you're going to include in the block. You could just add a 0 byte to the end of every single signature. And now the transaction ID...
You duplicate everything.
Exactly. The miner gets to choose which transactions go in the block they mine, so they can mutate every single transaction if they wanted to.
Okay, so there's a replica of those transactions, and the whole system jams.
It jams if you form a transaction using the output based on transaction ID. So one simple workaround is never do that. The problem is if you're someone like Gox, where you're producing high volumes of transactions, that constraint that you can't spend the output of any previous transaction until it's 100% guaranteed that you know its transaction ID, that's a pretty difficult limit. What that means is you have to have more coins in circulation because you have to wait longer to turn them around, and that, from a security standpoint, you want to have as many coins as you can in cold storage where nobody can touch them. You don't want to have more coins in circulation because that increases your risk.
What happened at the Bitstamp, for example, and empty gox was because of this problem of malleability. They were sending Bitcoins to people who wanted to withdraw, but they lost track of what they sent, so they didn't want to send twice the same money.
Exactly. Normally, the thing that you would do if like you didn't know about transaction malleability, the way you would determine whether you had paid someone or not is you would track the transaction ID. If I pay you 1 Bitcoin because you withdraw from my exchange, I track the transaction ID. When that transaction confirms, I know you got the 1 Bitcoin.
Yeah.
Now, if it's tomorrow and that transaction didn't confirm, I might think you didn't get that 1 Bitcoin. I wouldn't
So you send another
necessarily.
one.
Right, right. I wouldn't necessarily think that you might have received that 1 Bitcoin with a different transaction ID.
Yeah.
Now, that attack was actually known since 2011. That's kind of the older version. But this idea that high-volume transaction streams can be jammed, that's the new version of the same problem. It just didn't occur to anyone that those two properties of Bitcoin, transaction malleability and the fact that you have to refer to an output by transaction ID, would interact in this bad way. And that's what happened recently.
Is this new problem, is it possible to solve it? Like have a new version in a few weeks and of the protocol and solve it?
There's a couple of different solutions. If everybody could change everything all at once, you could solve it very, very simply. You could define a new standard where one and only one signature was valid for a transaction, where there was one and only one way to do it. That's kind of complicated because you have to get everybody to sort of reject transactions that otherwise seem valid, or you have to start mutating everybody's transactions if they don't meet the new rules. It's not a very pleasant thing. So I believe what Bitcoin is going to do, it looks like, is they're going to come up with a new form of transaction ID that's just used for tracking the transaction to see whether it went through or not. And that won't include the signature in the ID. So if someone mutates the signature, they'll change the transaction ID, but they won't change this new ID.
Okay, very good. Can you tell me how Ripple is different and how Ripple works and how Ripple is different to the Bitcoin protocol? You said instead of using proof of work, you use consensus.
Yes.
How is it different and why it doesn't have this problem?
Well, there's two basic differences between Ripple and Bitcoin. One of them is that we use consensus instead of proof of work. The other is that we have built in from the beginning the ability to transact in arbitrary assets like dollars or yuan or whatever. But as far as transaction malleability goes, basically we have similar issues because we also have transaction IDs and you can also mutate Ripple signatures. So we're going to have to implement our own solution so that people can track transactions by transaction ID to prevent against that problem where you think that you made a payment where you haven't made a payment, where you've made a payment, but you think that you haven't made that payment. But where we're not vulnerable is you don't refer to previous outputs by transaction ID. You refer to previous outputs by account. So there's it's not like somebody can cause your transactions to jam.
Very good. So it has the same problem, and you're going to fix it, but it's a little bit different.
It's not as severe because they can't jam your transaction chains. Yeah. It's also harder to exploit because there's no miners.
Let me the way I understand Bitcoin, also from a non-technical perspective, is that if I send 1 Bitcoin to you, the ledger says, okay, from Donald's address is -1 to David's address is +1, and that the transaction is done there. But nevertheless, even though everybody can see that in the ledger, it's pending a confirmation that is every 10 minutes. The confirmation is done by the mining pool that they need to prove that they did some work, and once they prove it, they enter the block into they confirm everything that happened.
That's correct.
How is so that's why you need miners. In Ripple, I understand there's no miners, and that every transaction is instantly in a few seconds is approved. How does that work?
I like to model it as a room full of people who just constantly agree with each other. So if you want to perform a transaction in Ripple, you basically walk into this metaphorical room and read out the transaction. If the transaction is valid and there's no reason it shouldn't be agreed on, essentially everybody in the room nods, yep, that looks good to me. They compute a new ledger in which that transaction has taken place, and they all agree on the hash of that new ledger. As soon as you have a supermajority who's agreed to the new ledger hash, then you know that that transaction is confirmed. And any conflicting transaction, like sending those same funds to someone else, can't occur because those funds have already been sent to you in the ledger that everybody agreed on. That's an oversimplification, but that's the basic idea.
So it's more or less like the Chicago Merc used to be before I was a stockbroker. So So everybody would go there and scream, "I sell 100 contracts," and another guy would scream, "I buy them," and everybody knows, and that's how the transaction
And
is
there's almost
supposed
like
to.
a big board that everybody's looking at. Exactly. That's essentially how it works.
If the same guy wants to double spend, and that is to sell again 100 that he doesn't have, everybody would say no because you already sold it.
Right, and worse, if they do say yes, they have a problem because they have to cryptographically sign everything they say.
Mm-hmm.
So if I have a cryptographic signature of you approving 2 transactions that conflict, I have proof that you're malicious. And all I have to do is present that to people, and they're just not going to listen to you anymore.
So on Ripple, when I send you one XRP, in a few seconds there's consensus and it's definitive.
Right, and then you have a supermajority of the nodes that are operating who've signed a sort of receipt saying, I've signed this ledger, and then you know that the transactions occurred in that ledger.
So exactly. double spending is resolved, but what you say that is pending is to solve the malleability.
Yeah, so you could still have the malleability problem in Ripple if you track transactions by ID and you said, oh, this transaction didn't go through, I better send another one.
Mm-hmm.
We don't think anybody does that right now, but if they did, then they could potentially be tricked. So we're going to close that hole completely using a solution similar to what Bitcoin uses. We'll be announcing that in a couple days.
In a couple days? Very good. Well, when that happens on Ripple and Bitcoin, I think the markets are going to be much more calm.
Yeah, the market reacted rather stunningly to this problem. I think people were worried that it was a fundamental problem that couldn't be resolved, but it's a fairly narrow technical problem, and we know how to fix it. We just have to actually do it.
This today it was strange. I didn't see any news, and on MTGOX the price is 230, something like that. Do you have any news?
No, I don't. I would just point out to people that that's not a meaningful price. I mean, for a price to be meaningful, Bitcoins have to be roughly equivalent to a Bitcoin in your Bitcoin wallet, and the dollars have to be roughly equivalent to a dollar in your pocket. A Bitcoin on Gox that you can't withdraw is nothing like a Bitcoin in your Bitcoin wallet. And a dollar at Mt. Gox that you can't withdraw is not much like a dollar in your wallet. So it's like, what's the rate, what's the value of a Bitcoin you can't withdraw in terms of dollars you can't withdraw? It doesn't reflect the value of actual Bitcoins. It reflects the problems that Gox is having.
Yes, I agree. Before, at the premium, it was trading at 1,000 when everywhere else it was trading at 850. It was also distorted.
Yes, I agree.
Very good. Bueno, thank you very much, David.
A pleasure, Donald.
Bye-bye.